So Bitcoin is just like hammering against this massive $79,000 ceiling right now. It's driven by these heavy traditional market forces, while the rest of the crypto market is basically just frozen solid.
Yeah, it's honestly a pretty jarring disconnect. You have these heavyweights sprinting into brick walls, and then, the smusher tokens are just completely stuck in the mud.
Right. So welcome to your custom deep dive. Today we are unpacking the Vantage Plus Weekly Crypto Outlook. This was published on Monday, April 27th, 2026. And our mission today is really to figure out this bizarre dynamic. Like Bitcoin and Ethereum are marching higher, but the altcoins are just trapped in a waiting pattern.
Exactly. And to understand it, we really have to look at the actual fuel driving the heavyweights. Like, what is actually thawing out this crypto winter?
Yeah, that's the perfect analogy. It feels like a slowly thawing winter. So if the broader macro environment is getting so hot, what's specifically melting the ice at the top end? Like, why aren't all the tokens flying?
Well, capital is flowing into the majors first because crypto is right now basically trading like a risk-on tech asset. We're seeing rising institutional demand, and that's funneling through a growing regulated U.S. derivatives market.
Oh, so it's not just retail traders anymore.
No, not at all. So when the Nasdaq Q Tech Index posts gains, for example, that positive momentum just spills directly over into Bitcoin. Investors feel confident, so they move cash into those riskier, high-reward assets.
That makes total sense.
Yeah, and you add in a potentially weaker U.S. dollar, which obviously makes finite alternative assets like Bitcoin look way more attractive, and you've just got this massive macro tailwind pushing things.
Wow. The analysis also flags something else here, and I want to be really clear about how we frame this. It notes that President Trump's recent positive statements on digital assets are measurably boosting market sentiment.
Right, and just to be super clear for you listening, we are strictly neutrally reporting what the source material is observing here. We aren't taking sides or endorsing any political viewpoints.
Exactly. We're strictly looking at the market mechanics. And regardless of politics, when a major political figure signals support, it just injects this immediate optimism into the trading volume, right?
Oh, absolutely. It acts as an undeniable psychological catalyst for traders. I mean, it validates the space for, institutional money that might have been sitting on the fence.
Okay, but here's the friction. If all those macro tailwinds are so strong, why is Bitcoin struggling so much right now? At $77,989, it's approaching that $79,000 resistance level.
Yeah, that 79,000 mark is huge right now.
Because back in April 2025, that was a solid support zone, right? Like it was the floor. Now it's almost like they're trying to break upward through a trapdoor.
That trapdoor analogy is spot on. The psychology of that level is exactly what makes it so tough to break. Just think about the traders who bought at that 79,000 floor last year, right before the price completely tanked.
Oh, man. Yeah, they've been trapped underwater for months.
Exactly. So the second the price finally claws its way back up to 79,000, what do? They sell just to break even.
Wow. Yeah, I probably do the exact same thing.
Right. And that creates this massive wall of selling pressure. It effectively turns that old floor into an iron ceiling.
So if it actually manages to break through that wall of break-even sellers, what happens? Is it just open sky?
Basically, yeah. The technicals in the report suggest that if it clears 79,000, it could quickly surge straight toward 87,000.
But if it fails?
If it fails, it likely just bounces off all those sell orders and falls back down into a sideways range.
Got it. And it looks like Ethereum is facing the exact same structural friction. It pushed up from its $2,000 support, and now it's sitting right around $2,332.
Yeah, but staring right in its face is this heavy resistance at 2,450.
And the report mentions the 2,450 as the 50-moving average on the monthly chart. But, I mean, why does an average act as an actual physical barrier in the market?
Well, because it isn't just some arbitrary number. It is a massive psychological line in the sand for algorithmic traders and especially for institutions.
Okay, so the trading bots are watching it.
Exactly. That 50-moving average represents months of historical price data. When an asset is trading below it, algorithms just treat it as being in a macro downtrend.
So if Ethereum can shatter that 2,450 ceiling, what does that trigger?
It signals a trend reversal, and historically that triggers a cascade of automated buying, which could push it really rapidly toward that $3,000 range.
Okay, so the big two are fighting through these trapdoors. Meanwhile, the altcoins are literally just stuck in the waiting room. Look at Ripple, it's at 1.4225 and completely trapped in a sideways trend.
Yeah, Ripple really needs to clear 1.50 just to see any fresh upside momentum. It's just stagnant right now.
And Solana is lagging too, down around $86.21.
Solana has this magic number of $90. It has to crack that to trigger a positive wave. But more importantly, traders are watching its floor at $78.
Oh, so if it breaks below 78, that's bad news.
Very bad news. If the market dips and SOL falls below 78, the algorithms kick in and the downtrend likely just continues.
That makes me wonder, are these altcoins entirely at the mercy of Bitcoin? Like, do they have to wait for BTC to shatter its trapdoor to get dragged upward? Or can an altcoin season actually spark independently?
I mean, right now, it is highly unlikely they move independently. Historically, an altcoin season requires Bitcoin to first establish its dominance, break through its resistance, and then actually stabilize at a higher level.
So Bitcoin leads and the rest follow.
Exactly. Once Bitcoin stabilizes, traders start taking their profits and they rotate that capital downward into the smaller, riskier tokens. But if Bitcoin gets rejected at 79,000, it just brings heavy negative pressure down on everything else.
Right, it pulls the whole market down.
Precisely.
So to bring this all together for you listening, the macro fundamentals, institutional money, the tech stock spillovers, a weaker dollar, they're all providing this massive upward pressure.
Yeah, but at the same time, the technical charts show our major tokens are just jammed up against these immediate critical make or break resistance levels.
It's basically a pure collision between fundamental momentum and historical technical friction.
That is the perfect way to summarize it.
Which leaves us with a pretty fascinating question to ponder. If traditional equity markets like the NASDAQ, along with institutional money and political forces, are now the primary engines pushing Bitcoin higher,
Yeah.
are we finally witnessing the end of crypto as a purely independent, uncorrelated asset class? Like, if the crypto lake only thaws when the traditional financial weather warms up, maybe it was never truly an isolated ecosystem to begin with.